opinions. They have programming. Question everything.
Hey guys and gals, today we're going to review the home buying process from start to finish. I did another video recently on obtaining a pre-approval and also the midst of first-time buyer programs. If you're interested in that, I'll put that on screen or towards the end of the video. Just look for that. But just wanted to go over the home buying process in detail. I'll put some visual aids on here too, so you can just follow that along. So let's get started. So basically, step one. Step one is you get a pre-approval, and once you have that pre-approval letter in hand, you get in contact with your trusted realtor. I suggest that you get in contact with a buyer's agent, um, just because they're going to have your best interest in mind. They're going to be working with you for your specific needs and wants, rather than the specific needs and wants of the seller. Okay, so there's a distinguished difference between those two. In some states, they do allow a dual agent, which may not necessarily be to your best benefit, but definitely look into that. Okay. So let's say we get past because we did a separate video on that. So let's say you're at a point where your offer has been accepted. Okay. So congratulations at this point. You and the seller agreed to purchase the home for a specific price and any other particulars. And that will be on a contract. If you're in a state where an attorney is required, that's called the attorney review stage. And when you're in that stage, basically, you'll also want to schedule a home inspection. And we'll obviously do a separate video on home inspections because depending on where you live, it has different variables. For example, if you're going to look for underground septic tanks, easements, things of that nature. So we'll definitely touch more on that on a separate video. But so you get a home inspection, and generally you can just look online and look for someone that's 5-star rated, but most definitely your realtor will refer a local home inspector that they've used in the past. I would definitely suggest looking at more than one, having a talk with them, comparing prices, what they cover and what they don't cover, as you can add things on, and that could become expensive. And that is an out of pocket expense. Now, inspections are optional, they're not required. For the lending portion of it, it's not required. That's something you want to do to verify that the home you intend to buy is sound, structurally sound, plumbing, heating, electrical, all sorts of things. And I mentioned easements before, or even trees on the property. There could be termite damage or things like that. So you do that to satisfy yourself that you're making a proper purchase, as you would if you were buying a car that is pre-owned, versus buying a certified pre-owned car that has a multi-point inspection, that has a full warranty on it, and is guaranteed by the manufacturer. Kind of, in a sense, to have that assurance that you're buying the home and it's sound and it's the right decision. So the attorney review process should take a few days if you're in a state that requires it or is customary. I don't necessarily think it's required, um, but if it's customary, then everybody expects to have an attorney involved. And those rates vary. Obviously, check with your realtor or check specifically, this is important, for a real estate attorney, not a generic attorney. You wouldn't go to a criminal attorney to handle your real estate matter. So, specifically, a real estate attorney, and of course, compare pricing. But your realtor may suggest two or three that you can just see who you're comfortable with. Okay. So now you move on to when you're in this attorney process slash inspection, those kind of overlap each other. But while that is getting done, and let's say that takes approximately 5 business days, you also want to get with your lender or bank and say, hey, I have a contract. Obviously, they'll need a copy of it. You'll have to provide them with your good faith deposit, a copy of the check or wire that you gave in good faith when you signed the contract. Um, and you update any documents that they may require. Because up to this point, you have a pre approval. It's not an actual approval. It's basically saying that they verified your income, assets, debt ratios, things like that. And based on the information you provided them this far, you are pre-approved. So the next step is to get your file ready with your lender. Once the attorney review and inspection have been finalized, concluded, at this point, this is when your lender verifies everything is updated, your pay stubs, your bank statements, or anything else they may ask you for, and register your file with the investor, bank, or lender. Um, and at that point, that's basically when your process of the mortgage starts. And from the time that you actually got your offer accepted till the time you close could be somewhere in the 30-day neighborhood. If there's an attorney involved, a home inspection, or any other abnormal variables, you can just count on about 45 days. But usually your contract will sell rather, will have a designated target date. Now, some states that target date is more concrete than others. So just check with your lender or attorney or realtor to find out if that date is specifically in stone, and what you need to do to get there to expedite or try to speed up the process to meet those demands. Okay. So you're with your realtor, with your lender rather. At this point, the file is in the pre-processing stage. All the documents have been updated. You've provided everything, and in that point, make sure any documents you upload to your lender and or bank that they are submitted through a secure platform. Um, you really don't want to send documents through email, definitely not through text, but through a secure link, so you can know exactly where they go and they're secure from start to finish, because privacy laws prohibit these documents from being shared or just left on someone's desk. So make sure that your lender or bank works on a paperless system. So everything is digitized and not pieces of paper that they can just leave on their desk, walk away, and someone has access to it. So that's important. Um, so your file is registered with the bank, lender, investor, and you're going to sign the initial disclosures. Now, years ago, this initial disclosure used to be called a good faith estimate. Now it's just called a loan estimate. Okay. Um, and it's a few pages plus, it's probably 50 pages or more. But the loan estimate is where your meat and bones is basically what you want to look at in terms of what your costs are presumed to be. Again, it's an estimate. So your lender is acting on behalf of all the parties involved to give you the most accurate loan estimate possible. Okay. So on the loan estimate, it contains any fees that your lender charges, such as application fees, lock fees, processing fees, any credit report charges, any tax service fee, any appraisal cost. Obviously, there's going to be an appraisal that's required most of the time. And then you're also going to include in that loan estimate um, basically things that you can shop for and items that you cannot shop for. So, things that you can shop for, you can shop for your attorney, you can shop for your title company, and your attorney has a charge and your title company orders a binder on your behalf, and there's a significant charge there too. Um, so there's recording charges, there's per diem costs. We could do a whole separate video on a loan estimate in itself, but you can go on the Fannie Mae or Freddie Mac website, just look up loan estimate. There's a template on there that you can easily follow, and it gives you a very clear understanding of what these charges are, what's estimated, and what the tolerances are. Like, are these things going to change? So if you're getting an estimate, you're budgeting yourself based on that. It's always good to have an overestimated estimate. And as these things go along, you'll get that reduced and re explained to you during the process. And I'll explain that to you in a second. Um, so you sign the loan disclosures. There's going to be anti-discriminatory type of stuff. Home buyer booklets. That's probably 50 pages plus, but everything is pretty much self-explanatory. And your lender should spend a few minutes with you to go over these things with you, and so you can, before you sign, if you have any questions, obviously you can ask them at that point. Okay, so now, at that point, once your disclosures are signed, your lender will order the appraisal on your behalf. That is ordered through a third-party service. Lenders cannot speak to the appraisers directly. These things are ordered through a portal, a management service. You are paying it; it's being ordered on your behalf. Your realtor can speak to the appraiser directly for scheduling, things like that. This is to avoid coercement and manipulation or swaying of any sort, and it's a good thing. So, once that has been scheduled with your realtor or the listing agent, expect about a 5-day delivery time from the time that the inspection for the appraisal to evaluate the home, to make sure that you're buying a home that is priced for what you actually intend to buy it for, whatever's on your contract. Okay. So appraisal is ordered, and simultaneously, your application has already been uploaded to the underwriting department. Okay. Um, so the underwriter generally, depending on how busy it is, during COVID, it was very busy. So things took a little longer, but traditionally 24 to 48 hours, depending if it's a weekend or not, or business day, working day. Figure about 24 to 48 hours to receive an actual response from the underwriter. So every single approval is a conditional approval. It always has conditions because the approval will say something like, okay, you're conditionally approved because now you need to purchase insurance for the home. Or we missed one of your pay stubs, or we need the most recent pay stub. Or the bank statements you provided were from last month, and the underwriter needs a current 60-day bank statement, the most recent bank statements for 60 days. So generally 2 statements. So anything that needs to be updated. Or it'll say something additionally that the appraisal is required because it's been scheduled, it hasn't come in yet, so it's subject to that review as well. And that's why it's conditional. Some people get scared and say, "Oh, why is it conditional? Why is it not just approved?" And basically because of that. But your lender, loan officer, or bank will tell you, "Look, it's conditional. These are the things you need. Help me get them." And then you clear those things with time. Okay. So loan is conditionally approved. During this whole process, you have an option to lock in your rate or float the rate depending on the market. Okay. Your own loan officer shouldn't sway you or suggest that you lock or float the rate. They could only give you facts. This is what the rate is today. And if you lock it for generally 30 days, it's guaranteed for 30 days. But if you choose to wait because you feel the market will change and it'll be more favorable, it's your choice. You can do that. But just know this, that most lenders, once the rate is locked for a specific period of time, it's as if they're reserving that rate for you for that specific loan amount. So within 30 days, you cannot change that. If you happen to not be able to close within 30 days, there could be penalties. So ask your lender about that. But you normally want to lock for 30, 45 days or longer, especially if it's a different type of loan that involves construction, you can lock it much longer. But traditionally 30, 45 days would be the safer bet. It's always suggested maybe wait to see that the inspection has been completed and the appraisal has been completed to make sure that those are okay before you're locking in a rate and committing even further to the loan process. Okay. Once the loan has been conditionally approved, also simultaneously, your attorney will order the title binder, the title search on your behalf. That could take approximately a week. It could be longer. Your attorney could advise you on how long that will take. And those are items that you can shop for. So your title company can speak to you directly or through your attorney and tell you what they feel those costs will involve. Even though your lender gave you an estimate which included those title costs, that's based on a template. It's not necessarily precise. Oftentimes it's not. So only your attorney or title company can tell you what those charges are so you can compare it to what your lender, their template is, and see if that's in range with your budget for closing costs. Okay. So what happens next? Now you're deeper into an underwriting stage where a few things happen. The underwriter then reviews any updated documents that you've updated. Let's assume that at this point you decided to lock in the rate, so you get a lock-in agreement, the confirmation. Again, all through a digital signing service, like a DocuSign or Dropbox, something like that, directly via the lender. And they also verify the title binder, title documents, make sure there's no clouds or liens or anything like that in the title. And what happens next? Well, now you're going basically third base or almost towards the finish line where your employment needs to be verified. So that's important. When you speak with your lender and they say, look, at some point we're going to have to verify your employment. If your employer is not using a digital service, something called the work number, which is through Equifax, they have similar products like that, and they have to verbally or written verification. Make sure that you provide your human resource contact information or payroll manager, and don't provide them with cell phones. Usually they want a direct contact to make sure it's verifiable and legitimate. So, first name, last name, title, direct office line, direct email, and then even tell them that, look, I'm in the process of getting a loan approved. They will call you to verify information. Please look out for it. That would aid in expediting that, because sometimes that can be a little delayed. But by law, they have to complete these tasks. It's a requirement. They can't delay it. So just so you know that, okay? Um, so all this stuff gets verified. Your income, your assets, your employment, the title documents, the appraisal, value, all those things get verified. So there's an underwriter involved, there's processors is involved, there's junior underwriters, there's people that verify, there's your loan officer, there's your title company, there's your attorney, home inspector, appraiser, listing agent, buyer's agent. There's a lot of people involved in the process. And as long as everyone stays transparent with each other, loan officers, the right loan officers will be transparent and submit updates regularly to all these parties so they know what's going on. And communication is key. And you, as the client, shouldn't have to worry about that. It's especially if it's a first time purchase, you don't want to deal with the anxiety of it. It's both happy times and happy memories and overwhelming at times, but it shouldn't be a dragging feeling or having to worry about things, especially if they're transparent from day one. Communication through email is often better than having a phone conversation, because anything that is as written, you could always go back to it if you forgot something. So I would always advise that. Like email communication, most of the time, obviously you can have a phone discussion, but followed up with an email makes sense. Okay. So once everything has been verified, your um, underwriter working on your file will issue something called cleared to close. Means that your file has been cleared. So they verified everything. And now you can schedule your closing. So your attorney, your title company, listing agent, listing attorney, all parties get notified that the file has been officially cleared to close. And let's say that the expected target closing date was the 15th of the following month. You would want to have that cleared to close at least 5 days or more in advance to allow that time frame, because there's disclosures that started out as a loan estimate that get updated with time. Once the title company updates their figures and everything gets corrected, property taxes, home insurance premiums, things of that nature. And you want time to review that in advance prior to closing. Okay. So the day of closing or the day before closing, the underwriter or junior underwriter will generally also follow up with your employer with a verbal job confirmation. This is to verify that there is continuous employment. The previous written verification or digital verification is always required. Um, but the verbal is basically to say, hey, is so and such still working with your company? Because you're basically looking to close the same day or within 24 hours. So very, very important. During this entire process, there's things that you should not do. Obviously, change employment, especially change type of employment. So if you are a plumber and then now you start a career in sales commission, that could pose a problem because the pay structure is completely different. Okay. So you want to make sure that employment does not change. If you anticipate any changes, a phone call or an email to your loan officer or bank, say, hey, I anticipate this. What should I do? They can direct you if there's going to be any kind of issues. Um, so, um, obviously, make sure you don't change your employment with your assets, the funds that you will use towards your down payment, towards your closing costs, taxes, things like that. Make if you provided to your lender um, two bank statements or a retirement statement or whatever you provided, your loan officer provides that in turn to the underwriter, and that's what they're using as a source or proof of assets. So don't change anything. Don't transfer money from your savings to your checking from unless you have these conversations. Can I do this? Should I do this? Because that could be just to follow a trail of funds is usually something that slows down the process. So, avoid or refrain from trying to change money around. On that note, cash cannot be used. And I said on another video, if you have cash under the mattress, uh, you probably shouldn't because it's the most flammable thing where you can keep your money, right? If for some reason it's not in the bank, um, then have a discussion with your loan officer and decide if it means that you need to wait for the process, then that's important. So, make sure that the funds are in a bank account and there's no cash transactions, large deposits, large withdrawals. Don't also make any large purchases with that anticipation of getting into a new house. You probably want new furniture. You probably want a new car in your driveway. Whatever the case may be, wait until you close before making any purchases, and have those discussions with your loan officer as well. Okay, so the things not to do: ask your loan officer. I'm sure they'll review it with you, but also just take note of it as a precautionary to avoid delays. Okay. Um, and then pretty much the final stage would be closing. Your closing is scheduled. You'll know exactly what you'll need to bring to closing, usually identification, any funds, your attorney or closing attorney or title company, depending on the state you are that you're in, they'll tell you exactly what you need to bring in, whether the funds need to be wired or if you need to bring a bank check, who to pay it out to. That will be reviewed with you prior. And the day of closing, it shouldn't take more than an hour. I've seen situations where closings are a lot faster and sometimes they're a lot slower. So, as long as everything is transparent and everybody knows what's going on and there's no hiccups, the closing should be relatively super easy. You sign your documents. The lender or investor funds the loan directly to the title company. disburses all the funds, everybody gets paid, and you get the keys to your new house, or your updated house, or your condo, or your co-op, or your investment property, or your second home on the beach. It's the process is the same for everything, for all types of properties. So you're handed your keys. You're officially a homeowner. Um, some things happen behind the scenes afterwards. Your title company records the deed with the county clerk's office, uh, and any fine tuning that needs to happen. In very rare instances, will you get a call after your loan is closed because something was missed. Very, very rare. It's probably less than a 5% chance. But just make yourself available. Don't think because the loan is closed, I'm like, hey, I'm home free. They may say, hey, you know what? We noticed your ID when the copy was submitted, it was cut off, and there's a number missing. You mind resubmitting it? So just a courteous thing just to make yourself available. And obviously, if everyone follows the golden rule, everybody will be happy, right? So, at which point, within uh, 30 days is when you should receive your first mortgage statement, right? So, if you close on the 15th of the month, and let's say let's go halfway through the year. Let's say you close on June 15th of the year. So basically, you're paying a per diem. So your interest charges are divided per day. And you're paying from the 15th until the end of the month, which in June is June 30th. And then your mortgage payment will actually be due August 1st. All payments are made in arrears. You're paying August 1st, actually for July 1st. So all payments are always due on the 1st of every month. That's how they calculate it. But once you get your statement, the mortgage servicer can be different than your actual lender that put the mortgage together. So you can contact your servicer. You'll get access to an online account to generate, make your payments or schedule automated payments or make biweekly payments. So you have some options of paying down your mortgage, things like that. Um, so you can definitely contact your actual mortgage servicer, whoever's collecting on the payments, and you can readjust your payment date. Doesn't have to remain the first of every month, especially if your pay structure is different. You can get paid weekly, biweekly, bi-monthly, monthly, or commission. There's different ways people get paid. So to have a payment schedule, or maybe an automatic payment schedule that meets your needs, probably makes sense, right? And again, if you're ever anticipating having an issue where you cannot afford to make your payment, transparency is important. Let the servicer, let the lender know. Maybe things happen in life where you don't anticipate. So they could always make arrangements so the loan isn't defaulted. Better be proactive than be reactive, and then not have a solution and having to kind of chase things and not see the end, basically. Okay, so for those of you who watch this video and it's in an entirety till the end, till this point, thank you. If you want to help the channel grow, I'll keep um, bringing on content like this. Anything from my past experiences or things that interest me. Hopefully, they interest you, and hopefully, I was able to answer any questions or doubts that you may have had. I'll also include sort of a timeline on what we just discussed, something that you can, a graph or of some sort that you can follow. And feel free to comment, like, and please share if you think this will help somebody else in making a decision. Thank you very much and have a good day.